Well, we had the June WASDE report today, mostly a neutral report and not a huge reaction from the marketplace. We're taking a look at the daily market summary and visiting now with Curt Kimmel of agmarket.net. How did that WASDE report affect the grains?
Well, I don't know if it affected a whole lot. The grain market finished, corn 7 to 8 lower, beans 4 to 7 lower, wheat down 1 to 1.25. I think the weather probably it was the main thing. The report itself, to get to your point, was basically just about unchanged. Old crop, they raised the import by 3 million bushels on corn, and that carried over into the new crop. They saw just some zigging and zagging for the most part. On the old crop, they did come in and lower ethanol usage by 25 million bushels, but they raised corn exports by 25 million bushels. I think it's ethanol usage is strong, higher gas prices. I think they put a little bit more ethanol in there. On the soybean side of the equation, virtually just unchanged. The rolled beans, they raised the crush by 20 million bushels, lowered the exports by 20 million bushels. So virtually unchanged for the most part. We got the world supply demand balance sheet, and they did confirm a little larger Argentina bean crop and a little larger Argentina corn crop, which is probably good for them because they started out with some very, very adverse growing conditions early in their growing season, but some beneficial weather helped that out. But the market reaction was just kind of slightly lower once those numbers came out. The AI programs read it right away, but as the day wore on, I think just the moisture around the Midwest put the market in a defensive posture.
And then even today and last night as well, we got even more rain across the Midwest. Do we think that weather being beneficial for the crop is mostly already factored in, or does that extra rain pose a threat to make things maybe even more difficult moving forward?
Yeah, that's a tough one because the trade looks at the radar when there's moisture around. That's going to be price negative. The lower areas are drowning it out, but the other areas are going to do well. But we are seeing too much rain, too much wind, too much hail in some areas. I know just north of us, they're up to 8 inches of rain since last Saturday. And, if they don't change, it's going to stress the crop somewhat. But the trade views that as price negative. The old saying is rain makes grain. I guess the modern day version is rain makes corn, corn makes whiskey, and whiskey, well, the rest of the story.
Absolutely, Curt. And we'll move on to the livestock markets now. How do cattle and hogs trade today?
Kind of mixed firm. Cattle up buck and a half. Feeders up $5. Hogs were mixed. Feeders continue to hang in there. Actually, today's trade kind of made sense. Lower corn values, higher feeder prices, but overall still waiting for some confirmation on the screw worm, and hopefully they can get that under control. The main thing in the livestock sector is the lower grain prices are going to help take the edge off on feed cost. But the main primary thing is cookout featuring overall meat demand here as we fire up the grills.
All right, Curt, lots of great information today. For anybody who would like to get in touch with agmarket.net for more marketing information, how can they do that?
1-800-779-1515, or else go to agmarket.net and click on Intel. They'll have a crop report recap on there this afternoon.
Thanks again for the time, as always, Curt. We'll talk again soon.
Take care.